Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Google agrees to create an AI cloud business with Blackstone, which will run on Google's homegrown AI chips.
Plus, the legal battle between Elon Musk and his OpenAI co-founders ends with a jury ruling Musk waited too long to sue. We'll dive into the details of the verdict.
And Meta bets big on Louisiana for the world's biggest AI facility. This as it plans AI-related layoffs this week.
AI-related layoffs, a theme for the market, but AI lack of exuberance pounding the market once again, with actually yields pushing higher. We're still focused on geopolitics, Ed, but we're looking at a third straight day of losses on the Nasdaq 100. We're off by about a percentage point. We're off by about 3% in those 3 trading days, as we just get a little bit of worry that we went too far, too fast on the hardware side of things. I shine a light on the semiconductor index. The stocks is currently off by 2%. In fact, we're down by 8-9%. Look, we're on the cusp of some sort of, recalibration of where we've been in this run-up. Yes, it was up about 70% from the end of March, but now are we on the verge of a correction? We're down almost 8 or 9%, as I say, but a rotation, some money moving into the software stocks. We've got key earnings coming from software and hardware over the next few days.
Neoclouds down. The news, Blackstone and Google forming a new company to be a neocloud. Blackstone brings $5 billion. There's debt financing. 500 megawatts is the target. Google's TPUs, tensor processing units, are the chips. And look at those names that are down. CoreWeave, Iron, Nebius in particular, all very NVIDIA-focused architectures, but neoclouds all the same. Competition seems to be coming.
It does. Let's discuss the impact of Google, Blackstone, the partnership, Ed. Bloomberg Intelligence says this pact could be a major boost for the tech giant's chips business. Mandeep Singh, who wrote that React, joins us now. And what's so interesting is, yes, the equity comes from Blackstone, $5 billion. It could be leveraged up to $25 billion. But this is just another way for Alphabet to get its hardware out there, but not actually have to build the data centers, it feels like.
Yeah, and look, when it comes to NVIDIA, their ecosystem of neocloud players is pretty big. I mean, you had a few of those on your screen. And when it comes to Google, you have got Terravol, Cipher Mining, but there aren't a lot of, TPU providers. And that's where, when Anthropic says they want to use almost $200 billion of capacity from Google has to find a way to, ramp that up outside of their own cloud. And that's where I think this sort of a transaction is quite interesting, where Blackstone is putting the money and also has got live capacity that they can bring online by 2027, which is what makes this very attractive from a Google standpoint.
Hey, Mandeep, what's the Bloomberg Intelligence thesis on the business model of setting up a neocloud for the TPU, right? Because Google Cloud, they have capacity that they could give to third-party customers. Why set up a new standalone NewCo?
Yeah, so in the case of Google Cloud, they are serving that traffic from Google's data centers. I mean, in this case, having a neocloud provider use Google TPUs, and then everything else is taken care of by Blackstone in this case, whether it's, the power or the cooling or the even getting the land for that data center. So from that perspective, having that live capacity is what, makes this different from Google having to do it on their own, which will be a lot more staggered in terms of how much gigawatt they can bring online in 2026, 2027 and beyond, whereas this would come live much faster given the involvement of Blackstone.
Mandeep Singh, who leads technology research at Bloomberg Intelligence, thank you very much. Let's take a look at today's big number. 7,000. That's how many workers Meta's resigning to new jobs related to AI. That's according to an internal memo. This comes on the eve of a 10% staff cut tomorrow to improve efficiency and, quote, offset Meta's investments in AI. AI-related job cuts are the talk of Wall Street right now, with Standard Chartered CEO Bill Winters also saying his company plans to cut more than 15% of its support staff by 2030, aiming to replace, quote, lower-value human capital with AI. Marta Norton is Empower Chief Investment Strategist, and I'm going to ask you straight up. It's an interesting balancing act, cutting roles and saying that this is not necessarily a trim, a downsize. It's a reallocation of priority to AI. As an investor, what signal does that give you?
Well, it's not the only piece of data that we have as companies do that. We hear a lot of different announcements of companies making reductions to their workforce related to AI. I think a lot of these are idiosyncratic when we're looking at the broad economy at the moment. We know that the broad economy added labor upon labor in the wake of the pandemic, and now there's a bit of right sizing. And so in some cases, I do think companies are adding the AI moniker to make it feel very forward-looking, to maybe AI whitewash it, but not necessarily a sign of the times in terms of very broad layoffs across the economy. In fact, one of the areas that I'm looking more closely for signs of an AI impact is more on the hiring side, where people are maybe slower to hire than they otherwise would because of AI. But yes, there are these idiosyncratic reports that suggest we are seeing a little bit of movement on that front.
I'm sorry, language matters. Lower value human capital. It's an extraordinary choice of words. But Marta, putting that to one side, there is anxiety out there of labor and people who are affected.
Yes.
But when you're thinking about how we see actual businesses lean into this moment, are we still seeing adoption taking root in the way you anticipated? Are we seeing the people, the labor that is able to use AI, being more productive with it?
You know, I think there's early signs that are pretty positive in terms of adoption by current employees. So I think everyone at this point is using the chatbots on a regular basis to do, low value research. But I think the bigger question is this AI agent deployment, what that looks like. And you are seeing companies talking about that in real time and beginning to structure workflows around it. I think we're very early, obviously, on the adoption of that, but that is where I think a lot of this AI productivity can stem from.
Marta, the market's trading in part in anticipation of NVIDIA after the closing bell Wednesday. Yesterday, I spoke to NVIDIA CEO Jensen Huang. This is how he frames the state of play.
We have the largest supply chain in the world. Our partners have done a great job securing supply for us, and so all of the pieces go together. The silicon photonics is lined up, everything is all lined up. It's just that the demand is much greater than the overall capacity of the world.
The demand is far outpacing this industry's ability to supply. When you go into an earnings, how do you decide, therefore, the bar in terms of what is positive and what is negative if you're in a supply-constrained world?
Well, I think you do want to see signs that they are monetizing it, right? If you're in a supply-constrained world, that demand should be moving earnings, and you want to see some evidence of that. But of course, when we're talking about the supply constraint, we're also talking about supply constraint in areas that would affect the likes of NVIDIA. So memory chips, for example, and what does that mean for gross margins, and how are they navigating that? I think those are important questions at the moment. But I think the bigger picture, and I caught that interview yesterday, I think the bigger picture that Jensen Huang is pointing to is this massive supply and demand mismatch that will carry through not just this earnings report, but for several quarters, years to come as this all plays out. So I really agree with his comment that this is inning one, inning two on the AI build.
Luckily, we all caught that interview. It was a great one with Ed and Marta Norton. We so appreciate having you on the show today of Empower. Thank you for your time. Coming up, a bitter feud, personal grievances, billions of dollars. The decision comes down to timing. We'll discuss a jury's rejection of Elon Musk's claims against his OpenAI co-founders and what comes next. This is Bloomberg Tech. The decision in that closely watched legal battle between Elon Musk and his OpenAI co-founders came down to timing. A jury ruled that Musk waited too long to sue over OpenAI's transition to a for-profit business. Bloomberg's Madlin Mekelburg has been following the case every step of the way. You join us now. Madlin, what did the jury decide? What didn't it decide on?
Right. It was a bit of an anticlimactic verdict, if I can say that, because the jury didn't actually make a decision on any of the claims that Elon Musk presented over the course of this lawsuit. What they said instead was that he had not proven his case within the statute of limitations set by law for the specific claims that he brought. So essentially, they found that he had concerns about this conduct and should have known about this conduct years before he actually filed his lawsuit. And so therefore, the case that the jury was hearing should be tossed out, which is what happened.
We're going to get an appeal, according to Mr. Musk, who posted on X that he would appeal. I believe, like, his legal team outside the courtroom said that we would appeal. If that's the case, what do we know about what that appeal would be based on from a legal perspective?
Right. It should come as no surprise to anybody who follows Elon Musk as a litigant that he plans to appeal this and fight this vigorously. We saw him celebrating on X afterwards, saying that, just because they decided on the statute of limitations, they never actually touched the merits of the case. I think an appeal on this grounds is a lot more narrow than if the jury had actually ruled on the merits of his claims. Right. So I think a lot still kind of remains to be seen of how this is going to play out, but it's going to be an issue that the Ninth Circuit Court of Appeals is going to have to sort through when he eventually files that.
Bloomberg's Madlin Mekelburg, thank you very much. Let's dive more into the legal considerations. Dorothy Lund is with us, a professor at Columbia Law School, focused on corporate law, governance and contracts, returning to the show and has been covering this trial with us. In our Bloomberg News story, we write that Mr. Musk was too late in his suit, and we later down in the story explain the idea that he had knowledge in 2024 and so basically should have filed his suit sooner. But I've got a lot of sympathy with people around the world that don't understand the legal technicality of that. The statute of limitations seems to play a role here. Is this codified, or is this the jury's discretion in deciding that Mr. Musk ran out of time?
Yeah, the jury had to basically answer this question of whether or not the statute of limitations applied to the two claims that were brought here. So the two claims, just to remind everybody, were that there was a violation, that OpenAI, Brockman, and Altman violated a promise that was made to Musk that it would have a permanent charitable mission to develop safe open source AI technology, and that they received undeserved benefits because of those broken promises. And so then OpenAI said, well, you waited too long to sue. You brought your case on August 2024, and the statute of limitations was only 3 years, which meant the things that you're complaining about that took place in 2018, 2019, you're too late. Whereas
I don't get it though. Like, surely did Elon Musk and his team of very expensive lawyers not understand the law or something when they filed the suit?
No, Musk, so Musk, of course, had these fabulous lawyers. And, the statute of limitations is told if you've if harm's been concealed or you haven't discovered the harm. And so his argument was, well, Sam Altman and OpenAI have been lying to me. They concealed that they were doing all this stuff. It wasn't until 2023 that I really understood what was going on. And so this gets back to your original question, which is, why did this go to a jury, right? The jury had to sift through testimony from both parties, documents, to try to understand this timing question. Okay, so when was it that Musk knew or reasonably should have known about the harm that he was claiming happened?
And instead, we all get consumed with billionaire versus billionaire and how much equity they own in the underlying company and what they're like in terms of managers or how trustworthy they are. At the end of the day, were we misguided to think that? When they go back to an appeals court, will it be argued in a different way?
Yeah, so it's a little disappointing that we didn't get an answer on the big question here, right? That the claims that I was telling you about just now are unaddressed. And in this appeal, we won't get any resolution on this either. So, this is going to be a narrow appeal on this decision of the statute of limitations. And because that statute of limitations question turned on a factual determination, that is going to be really hard to be overturned. Appellate courts rarely overturn a jury's fact-intensive findings, especially in this case where the judge also reviewed the evidence and said, I came to the same conclusion. And so the only path forward for Musk is going to be arguing a different set of things about, the argument would have to be some error that prejudiced the outcome here, improper jury instructions or improper evidentiary rulings.
We're having some technical issues, Dorothy, with your Zoom, so I'll give the internet gremlins a second to reset. But my question to you is exactly that. I don't want you to speculate, but what options does Mr. Musk have if he needs to go to the appeals court but argue something completely different to the original case?
Yeah, his argument is going to have to be that there were significant legal or procedural errors that prejudiced the outcome. You know, that the instructions to the jury were improper, their evidentiary rulings were wrongly decided. There won't be any discussion on the substance of this larger question of whether or not OpenAI violated its charitable purpose when it restructured to create a for-profit affiliate.
Court of public opinion, therefore, in many ways. Dorothy Lund, professor at Columbia Law School. Fantastic to have you. Thank you. Coming up, Parallel is moving past the era of flat-fee AI licensing deals. The CEO, Parag Agrawal, is going to be joining us next. This is Bloomberg Tech.
Parallel, a web API purpose-built for AI and led by the former CEO of Twitter, is launching Index today, a new marketplace that pays publishers and data providers based on how much their content actually helps an AI agent complete a task. Joining us is Parallel founder and CEO, Parag Agrawal. So in answer to the question, what did you get done this week? You launched Index. In this era of agentic, right, the agents need the web data and the proprietary data sets. You, I guess, saw a gap where the marketplace for that data doesn't exist, and now you think it does.
Yeah, we've been building towards this content marketplace now for the last 2.5 years. We started Parallel with the notion that agents will use all of the content on the web 1,000x more than humans ever have. And when that happens, the technology that we've built over the last couple of decades isn't enough, but the business models also break down. Ads, subscriptions, these business models no longer work. And that, I think, is the opportunity for us to figure out how to align the interests of AI agents doing real work along with the content owners who are creating valuable content that feeds these agents. And that's what Index is all about.
To help the Bloomberg Tech audience out, the question, what did you get done this week, was posed to you by Mr. Musk just before you left Twitter. How do you assign a value then to the data? You've called this Index, very interesting, right? On the one side, you have the agent or the entity the agent is acting on behalf of. And then on the other side, you have the source of the data, who sets a price or a value.
Yeah, so if you think about other deals that are being done, these deals are typically between a large lab or a hyperscaler or Google alongside a large publishing house. And these are flat fee deals where over time, I don't believe content owners get to participate in the growing economy of agents. Now, what's really happening with agents is they are starting to do real work, real knowledge work in the enterprise. So if you think about our customers span people building AI scientists, our customers are building AI lawyers, customers are building for finance using agents. And all of these agents that our customers build are doing real work. When they produce value, content owners don't get to participate in that economy of the value being created. With Index, what we're trying to do is build a system where if very valuable work is done using somebody's data, they get more money.
Right.
If someone has very high quality data, they get paid more. And we've built a model to figure out what this value is, what this marginal contribution is. And it draws upon from this game theoretic concept called Shapley values.
Let's talk about the Shapley value. It's contribution to the work performed by an AI agent. So basically, instead of content access crawls or citations, you consider the value. I mean, but where's the monetary number coming from? What are you pegging it against? And how? How do you work out what an AI agent has eventually learned itself off of?
Well, Shapley values has been my obsession for the last 3 years as we've been working on this. So just in a sentence, what Shapley values is about like if a few people decide to collaborate on building something in a positive sum way where the whole is bigger than the sum of parts, the question is, how do you divide up this value? And Shapley value is the concept that tells us the way to divide this value so that everyone is incentivized to participate. The net outcome of using this concept to reward content owners, it creates three really nice properties. One, high quality content gets paid more. Number two, content that gets used in high value work gets paid more. And most importantly, as agents do more work and create more value, content owners grow alongside them, which we believe allows content creation on the web to be sustainable.
There are a lot of content creators out there right now, Parag. So how do they sign up to Index? How do you make sure that it's not just quite large, either individuals who are writing, I think of Alex Heath, or it's actually those that have got a minor Substack, but with really valuable content that somehow the agent has managed to access? How do they access that?
Yeah, with Index today, we're announcing a collection of launch partners. These span premium news publishers like The Atlantic and Fortune to like really raw, factual, amazing content from the PR Newswire, business intelligence and data providers like PitchBook and Traction and Zoom Info, as well as independent creators like Alex Heath, Azim Azhar, and several others. The really interesting part about this is that we want everyone, all content owners, big and small, to be able to participate in this economy. And we want all agents, not just ones built by large providers, to be able to get access to all of this amazing content.
Parag, we just have 60 seconds, but can I ask you about X, the platform formerly known as Twitter?
Of course.
Still using it, your view of it, and it as part of XAI, as part of SpaceX?
I'm still using it. I'm still calling it Twitter. I think we built a product over a decade that I was there, which endures in value forever. And I'm really proud of the platform that we created. It allows the theme of content access and democratization out in the open versus in permissioned groups. And that theme is what carries forward into my current company, Parallel, where the goal is to have as much content as possible out in the open for everyone to have access to, everyone's agents to have access to, instead of just a few.
And be compensated. Parallel CEO, Parag Agrawal, it's great to have some time with you. Thank you for coming on. Now, coming up, we dive into Meta's mega data center plans in Louisiana and some of the hiccups along the way. From New York, from San Francisco, this is Bloomberg Tech.
Welcome back to Bloomberg Tech. There's still a semiconductor story in financial markets. And looking at the SOX, or the Philadelphia Semiconductor Index, we're down for a third straight day. A part of this is kind of a breather after what we were calling the melt up. The performance in chip stocks since the end of March was astonishing. But there's also this element that we are really close to correction territory. In 3 days, at one point in the session, we were down almost 10%, as Kara pointed out earlier. NVIDIA is a part of it. Right? And the idea that post-President Trump's visit to China, we don't really have a net conclusion of what's going on, but we get NVIDIA earnings on Wednesday. So, fresh off his trip to Beijing, NVIDIA CEO Jensen Huang says he's confident the Chinese market will eventually open back up to his company. Dell CEO Michael Dell shared the optimism for economic collaboration as well. Here's what both leaders told me at Dell World in Las Vegas yesterday.
The president wants America to win everywhere.
Right.
The president wants America to lead the AI revolution. And so H200s are licensed to sell to China. The Chinese government has to decide how much of their local market do they want to protect and how much of their local market do they want to expand with more AI capacity. My sense is that the demand in China is so incredible. Just like it is here, agentic AI is also making enormous progress there. My sense is that over time, the market will open. President Xi was very clear that he wants China to be an even wider open market. Premier Li Qiang was very straightforward and and to explain very eloquently that China will be an open market. So I'm looking forward to China being a more open market.
To clarify, Jesse, you were able to meet with those officials directly to discuss whether or not you can sell to those Chinese tech companies.
I didn't discuss directly with them about H200.
Right.
I was there to represent the United States, and I was honored to do so. I was there to support President Trump, and really glad to do so. But that was really the focus of my trip. President Trump had some conversations with the leaders, and I'm looking forward to what they decide.
Michael, you did not go to China, but I think what's interesting is you are a member of the President's Council of Advisors for Science and Technology, as is Jensen. Your net conclusion on whether or not China will become open to American technology companies to do business there?
You know, we have a business in China. Obviously, we comply with all the restrictions and various controls that are in place. But I hope that there's more economic collaboration between the United States and China. That ultimately is what will lead to greater outcomes and prosperity for everyone, and a greater likelihood of a successful relationship between the countries and around the world.
Dell CEO Michael Dell, of course, NVIDIA CEO Jensen Huang, speaking there with Ed yesterday. And look, let's just revisit today's big number, with Meta reassigning 7,000 workers to new jobs. Of course, they're related to AI. An internal memo from Chief People Officer Janelle Gale, viewed by Bloomberg, reveals employees will move into one of several new groups focused on AI-related products, including agents and apps. The new corporate structure will, quote, be flatter and have smaller teams. Now, this comes as the company is getting ready, of course, to cut 10% of its staff this week as part of an effort to, as they say, improve efficiency, Ed.
Yeah, sticking with Meta's big AI plans, Mark Zuckerberg's plan to build the world's biggest AI facility has enmeshed his company deeply in Louisiana's politics and economy. The project's providing an economic boost to one of the nation's poorest regions, but also bringing a host of growing pains. Bloomberg's Riley Griffin joins us more with the big take. And there's big readership on this, a lot of interest. You did what every good beat reporter does. You go there. You see what's happening on the ground. The headline is $200 billion, right? That's the commitment. What is happening with Meta in Louisiana?
Yeah, a really important point here is that $200 billion spend that Meta is thinking about with Richland Parish and its data center there is largely about the chips. This is going to be a 5 gigawatt of compute capacity data center, another 2.5 gigawatts to support the broader campus, which is spanning nearly 4,000 acres. President Donald Trump has said that this is going to be a Manhattan-sized project after speaking with Mark Zuckerberg. But a lot of that spend isn't going directly into the community. It's going into the chips inside the facilities. And we still have to ask the question, what does this mean for the people of Richland Parish in the Louisiana Delta, a region that has struggled for decades and where farmers are really losing $400 on every acre of cotton they sow right now.
Well, let's go to Dustin Morris, because you paint a picture of how his economic reality is currently. He's a soybean, a corn farmer, and he's flying around his own land trying to work out whether it's the right time to be selling out, right?
Yeah, it's a story of expected land rush, right? As with all of the data center stories of this size around the United States, many of them shifting into rural regions, particularly in the South. And people are looking around and wondering, do I trade this history? Do I trade this land? Do I trade this crop for a data center? And it was really an honor to be able to go multiple times to Richland Parish and hear their concerns and think about the way they're looking at Meta as a lifeline. And over years...
Well, let me jump in. What are Meta saying about that? Like, what's Meta's response to it, and what do people genuinely feel about the company? Are they even aware it's Meta building there?
Well, it took some time. Meta hashed out this deal over the course of a year in private. Meta is certainly saying they want to be there in the thick of it with the community. They're investing in the schools. There's actually a school at the corner of the data center. There are discussions about whether it should be moved. I have heard that Meta is reviewing plans. So they're in the trenches. But notably, Meta is only bringing 500 jobs. This is a community that's looked for 5,000 over the years from an auto manufacturer and has been unable to court that. So will 500 jobs be enough to provide that economic lifeline long term? I'm not sure.
Riley Griffin with the big take. top of the website and the Bloomberg terminal. Caro, there's plenty more news out there today.
There is. It's time now for Talking Tech, Ed. And first up, Chinese AI pioneer Moonshot is restructuring to secure its path to public markets. Now, the developer of the popular Kimi chatbot has informed investors it will revamp its corporate structure to comply with Beijing's rules and pave the way for a highly anticipated Hong Kong IPO. Speaking of which, Chinese robotics unicorn Lingbot is exploring a Hong Kong IPO that could launch as early as this year. Now, the maker of highly dexterous robotic hands is targeting a $6 billion valuation and counts Samsung and Tencent among its clients. And China's demographic time clock is triggering an unprecedented automation boom. A new report from Barclays shows humanoid robots could offset as much as 60% of that labor decline by 2035, turning what is a structural crisis into a hardware gold rush. Ed.
Coming up, we're going to go live from the JPMorgan Tech, Media and Communications Conference, and we'll hear from Laurie Beer, JPMorgan Global CIO. That conversation next. This is Bloomberg Tech. Let's get out to the JPMorgan Tech, Media and Communications Conference in Boston, where Bloomberg Surveillance co-host Lisa Abramovitz is standing by. Lisa.
Thank you so much, Ed. I am here at the JPMorgan Conference for Technology, Media and Communications, and I'm here with Laurie Beer, the Chief Information Officer for JPMorgan. Laurie, wonderful to speak with you. In many ways, you are the woman of the moment because you have to understand how to oversee change that seems to be happening at an accelerating pace. Can you give a sense of just how quickly it has accelerated from, say, 6 months ago, a year ago, to right now?
Yeah, I think it's an amazing moment, first of all, to be in technology and to be in financial services. And we definitely saw the Gen 1 tools come out a couple of years ago. The last 6 months have rapidly accelerated, not only new models getting created, but how we're able to apply them. And so it really, ties back to how do we think about driving and adapting change so quickly?
Yeah, one thing, it's created a lot of nervousness, a lot of anxiety. There was a story that was out this morning about Standard Charter's CEO coming out and saying that he was going to cut 50% of staff, support staff, and removing lower value human capital and replacing it with AI tools and investment in AI. What's real, what's not, when it comes to sort of the mass job cuts? What's been your experience?
Yeah, so overall, we've seen definitely productivity opportunities. So even when we think about technology, we've seen 10 to 20 to 30% improvement just from the initial Generation 1 tools. As you look to agentic, you're going to see even more. But there's a huge demand. There's a huge demand to create new products and services and experiences for our customers. We're using AI to figure out new products to offer. And frankly, when you think about the other side of it, the AI is also creating increased cybersecurity risks. So how do we think about also accelerating the investments to protect our customers and clients too? So the demand remains significant, and we're able to get a lot more done than we have historically.
How scary is Mythos?
So with Mythos, AI in general, but it's really good on both sides of the equation. One, to understand vulnerabilities. And so the key with that and any other AI is how do we capture those? How do we clearinghouse those? How do we update those in a safe and secure way? But on the other side of this, as you apply these models into the software development process, we're going to have safer and more secure software. On the flip side, our cyber teams can use the power of these models to be able to protect, defend, identify fraud, identify issues more quickly. So there's really two sides of this equation to think about.
Based on how quickly you see technology shifting and what tools are really coming to the fore, how does the mindset have to shift of the people who work for you?
Yeah, I think it's a great question. The technology is amazing. I think this is truly a shift, a transformational shift in technology where this is getting embedded and horizontally across all layers of the stack. The harder part is the change management and the leadership. And I think really thinking about where are things going? We don't know all the answers. So how do you navigate change in an uncertainty? It's still very early innings. So it's really had to shift from How do we help guide our teams? How do we make sure our software engineers understand what's coming? My management team spends a lot of time on the weekends building their own apps. Pick your favorite coding, agentic coding tool. But it helps them understand what's coming. And I think this is a moment where leaders, in addition to software engineers, truly have to understand the change. And we have to understand, how do we actually create an environment that allows us to pivot and navigate when times are uncertain and really make sure we don't lose track of what's really important. How do we deliver products and services and experience for our customers and clients?
How do you balance innovation with risk? And the idea of the tried and true, you need to do this project versus moonshot projects.
Yeah, I think this is one of the most interesting times when you have to think about the balance of innovation and risk taking. We wouldn't be in business as long as we have been if we haven't driven a lot of innovation historically, but we're also in the business of managing risk. And so I think in this moment, you have to really think about going at the appropriate speed of innovation. Some of these moonshots are becoming real. And so you have to move aggressively at the innovation front, but we obviously are a business of trust, and we have to make sure our customers, our clients, the bank is protected every day. And so finding this balance and actually, again, using these capabilities to also protect ourselves. And so it's this really interesting time. While along with that, you don't necessarily know who's going to win in the end. And so making sure we're not locking ourselves in to one provider or one scenario, and we're constantly testing, sandboxing what's on the horizon in the future.
Does it change your decision whether to build or buy in terms of different software solutions?
It's been interesting because over the last several years, we've made sure that we're really focusing our engineering community, and we have a large engineering community, on building the things that are competitively differentiating and create value for our customers and clients. And over time, you have to balance where that still makes a lot of sense and where we focus our energy on those unique products and services for our customers and clients. And so when you think about the balance of trade and the fact that software engineering overall is increasing in speed, and it is more cost effective when you look at the end-to-end product development lifecycle, there are different trade-offs you would consider in making those build versus buy decisions, but you're always going to have some of those, enterprise software solutions, frankly, that aren't competitively differentiated, that sort of help us run the bank without delivering those unique products and services.
Just 20 seconds. Do you think that we're going to be able to recognize what banking looks like, say, in 10 years?
I think we're watching it transform as we speak right now. At the end of the day, we have to maintain that trust with customers and clients, and we have to make sure that their unique needs are served across the over 100 countries we operate in. But how we do it and the products and services will absolutely evolve over the next several years.
Caroline, that is Lori Beer, the Chief Information Officer at JPMorgan. I'll send it back to you.
What a great day. What a great set of interviews. Thank you, Bloomberg Surveillance co-host Lisa Abramowitz there. Ed, we've got some breaking news in the meantime.
Yeah, some breaking news on the terminal about Apple. Apple Chief Hardware Officer Johnny Srouji is reorganizing hardware development and shifting oversight of key functions such as product design, part of an effort to speed up work on future devices. Sources say the hardware shakeup is also meant to better integrate teams working on in-house silicon with those that are creating products. And, of course, Bloomberg's Mark Gurman, the one carrier that broke the story. Some other details, Shelley Goldberg, Dave Pecula are now going to oversee product design, maybe not names as familiar to the Bloomberg Tech audience, but in this new era for Apple, a lot of focus on who's right at the top and running the show.
They'll become known. Ed, thanks. Meanwhile, coming up, look, we're going to be speaking with Armada CEO Dan Wright as the company raises $230 million in a Series B funding, boosting its valuation to $2 billion, and some new strategic investors and big projects for the hyperscaler for the edge. This is Bloomberg Tech.
Some more breaking news crossing the Bloomberg terminal. OpenAI founding member Andrej Karpathy says he's joined rival Anthropic. In a post on X, Karpathy says he will be working on R&D with Anthropic and be focused on helping train new AI models. Karpathy previously helped lead the team behind Tesla's autopilot system before then returning to OpenAI. He left the ChatGPT maker for a second time last year and had launched a startup focused on AI and education. And in that post, Caro, he says that he's still passionate about education, plans to resume his work on that. But in the market of AI talent, this is a bit of a wow. This is a big story that I didn't see coming, breaking this morning.
It certainly is. The wows keep coming. Meanwhile, let's talk about a fundraise now. Armada has just raised $230 million in an oversubscribed Series B round, boosting the company's valuation to a cool $2 billion. The company is also announcing a partnership with Johnson Controls to produce modular data centers. And they're at scale. Joining us now, Armada CEO Dan Wright. What's a modular data center? How are we going to be making it?
Yeah, thanks so much for having me on. A modular data center is a full stack AI factory that you can deploy anywhere. And we can do it with the 3 S's. We call it speed, scale, and sovereignty. You can deploy these within weeks. You can scale up with demand versus traditional data centers. Sometimes you end up overbuilding or building the wrong thing. And then modular data centers also have the benefit that you can get sovereignty down to the site level. People used to talk about data sovereignty in terms of countries, but with increasingly sophisticated cyber attacks, now you want data sovereignty at the site level.
This is all about speed, movement, building. Funding, this helps you move even quicker, or what's the plan here?
Yeah, so this round was co-led by Overmatch, 8090 Industries, as well as BlackRock. And really what it allows us to do is scale up to accelerate deployment of the US AI stack. As part of this, we're also announcing a global agreement with Johnson Controls, where starting with Galleon Forge 1 in Arizona, we're going to do continuous manufacturing of these modular data centers. And if you look at them, they kind of look like shipping containers. So they're easily transportable anywhere in the world. You can deploy them wherever you want. And the nice thing is you can use any source of power. And that's obviously important. Power is a big concern when it comes to data centers. Energy is distributed. We're saying compute should also be distributed.
Where's the demand coming from exactly? Who wants these?
Yeah, so energy companies, we're working with many of the largest energy companies in the world. All of them have a hard segregation between IT and OT, meaning that the only way to do anything with AI is to deploy the infrastructure on the rigs, on the refineries, and run those models behind the firewall at the edge. We're enabling that. They're all trying to be fully autonomous over the next few years. You need compute locally in order to enable that. And then also defense is a huge driver for us. For example, with the conflict in the Middle East, we got a call from an ally. They said, hey, we need one of these. Like immediately, we were able to deploy within days. They called back, said we need more. We were able to ship more out.
And who are your partners within this data center? I can understand that you're helping with the construction of it all, but still you need the chips from someone, you need the servers from someone. How are you bringing this all together, and how open are you to different types of partners?
Well, I think that's actually part of the magic of Armada, is that we built this ecosystem of amazing partners. And it's kind of like actually what the hyperscalers did 20 years ago, is you're bringing all of these different services and you're making them accessible to more people. That's what Armada is doing for the edge, is the hyperscaler for the edge. And a good example of this, we just announced a partnership recently with Microsoft to bring Foundry, bring Azure Local, allow them to run, these customers to run services that they love from Microsoft, models that they run from Microsoft at the edge, air gap. Same thing, we announced a partnership with OpenAI. We announced one with NVIDIA, Dell, as well as Palantir, bringing all those capabilities to the edge.
So Dan, real quick, I was with Michael Dell and Jensen Huang yesterday. The bigger theme is on-prem. People want at the edge their facility close to them. Is that an addressable market for you? We just have 30 seconds.
Yeah, absolutely. I mean, that's what I believe is going to happen, is you're going to have sovereign AI factories. And really what that means is that every country and every company is going to have its own AI factory. And I know that Michael and Jensen would agree with me on that, because they've been saying that publicly. And in order to do that, you need both the chips, you need the servers, and then you also need the infrastructure, and that's what Armada is enabling as the hyperscaler for the edge.
Dan Wright, Armada CEO, back on Bloomberg Tech after a big fundraise. Great to have you back. Thank you very much. That does it for this edition of Bloomberg Tech, Caro.
Yeah, you don't want to forget to check out this podcast. What a rich podcast we're going to be having. All eyes as we build up towards NVIDIA's earnings after the bell tomorrow. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. Ed, still a phenomenal interview from yesterday as well.
Yeah, and the market is waiting. Anticipation for the NVIDIA print Wednesday night. Post melt up in chip stocks. Wow, this is Bloomberg Tech.